Good evening and a warm welcome to everybody present here. I am Anushka Desarkar, your host for the webinar today. And let's dive straight into this. Today's webinar is all about the market outlook. And to understand this better, it is my pleasure to introduce Ms. Sonam Srivastava. Ms. Onam comes with more than 10 years of professional experience in systematic portfolio management and quantitative trading in several teams. She is a globally recognized researcher in the field of machine learning in finance and quantitative investing. She is building a business out of a deep passion for quant finance at Wright Research, a Mumbai based research analyst firm. She brings practical insights to the table today with a wealth of knowledge and expertise to our webinar. Before moving ahead with the session, please know that if you have any questions, you can send them in the comment box and we will be taking those up towards the end of the session. Sonam, over to you.
Um, Thanks a lot, Anushka. Thank you for introducing me, and super excited to meet the SBI Securities audience. Uh, you gave a good introduction about me, but I would also love to talk to the audience. Is that obviously at Right Research, for 6 years we've been working in the Indian market, and we are very excited about the opportunities that the market shows right now. Last 6 years we've done momentum investing, right, which is a type of investing that tends to capture trends in the market very successfully. And I think right now, after a little bit of volatility in the market, we think it's a great time to look at momentum as a factor, right? So what I would do in this session is, talk to people about what's happening in the market, why is it exciting time in the market, what are the opportunities, which sectors are looking good, what are the risks. Obviously, Donald Trump is doing a lot of things. How is that impacting the markets? How are the geopolitics impacting the market? Plus, what we will be talking about is also something very dear to us at Right Research, which is quantitative investing, investing based on data, plus, you know, momentum investing, right, which is actually finding trends in the market using data, which we do really well as the key part of this session, right? So we'll be talking about momentum, what looks, what are the stocks that are in momentum, and it's not a recommendation at all about anything, but we'll be discussing broader trends and maybe giving you some examples also. So it's going to be a very fun session, and I'll start it off by talking about the recovery signs that we are seeing in the market. See, obviously, the first few months of 2025 have been a little bit troubling, right? I mean, the Nifty saw a decent amount of correction, but alongside it, a bigger correction was seen in small and mid cap segment, right? You can see that a sharp correction was seen, but from that you're seeing a very decent recovery that is happening in the recent times, right? So Nifty has totally recovered uh, from the drawdown that happened, and small and mid caps are also slowly picking up. So that is the context. We're seeing the trend that is there in the market getting stronger and stronger, and yeah, I think that is what we are sort of betting on right now. Now let's talk about um, the next part, which is positive sentiments. Like I said, in the economy, we think right now is a great time to start accumulating stocks, start getting prepared, because there are a lot of positive signs that we are seeing in the economy, right? And what are these positive signs? I think first thing to see here would be the consumer confidence, right? After a few years of decline in consumer confidence, right now is the time when you're seeing that exuberance sort of come, right? So we've seen consumer confidence go down in the end of last year, but now slowly it is picking up. So you can see that the confidence in the economy is getting stronger. There is liquidity that is improving in the system, right? RBI has boosted the liquidity in the system, and whenever the liquidity is boosted in the system, that leads to uh, people having bigger access to money, businesses having access to money, and then them investing more, doing more capital expenditure to actually boost the economy. That's another positive sign. I think one big positive sign is the rate cut that happened by the RBI recently. There was a big rate cut that happened, 50 basis point. The RBI is front loaded the system. Front loading means that they have cut the rate earlier. So they've cut more and early so that the impact can pass through into the system. So that's a big positive that we are seeing. And as the rate cuts happen, that means that loans become cheaper, right, for businesses, for individuals, for people looking to buy a house, stuff like that, which simulates these segments in the economy, right, which simulates growth in the economy. So that's a positive sign for growth in the economy as well. And what's very positive is that typically, like for example, in the US, if you follow the US market, what you're seeing is that the US, they're not cutting rates, right? They are not really pushing for growth. They are controlling inflation right now. And sometimes what can happen is that if you are delayed in cutting the rates, then your economy turns, let's say, recessionary, right? And when the rate cuts come, they are too late. But in this case, RBI has cut these rates earlier, which gives us the hope that the growth will be coming back in the Indian economy. Inflation, like we've seen, inflation is at a low. Recent inflation that came out is the lowest among, I think, past few years. So that's a very positive sign. Similarly, what's very positive is that the FIIs have finally turned positive. If you look at this long trend, you will see FIIs have been selling since September, October, and it's been a little brutal. But recently, FIIs have started to come back, and that's a big positive for uh, for the economy, right? So a number of factors, right, from liquidity, from interest rates to economic sentiment to inflation, are all turning positive. And because of the healthy correction that the market saw, you will see that the valuations are also at a reasonable level, right? Which means that there is steam left for the market to pick up from here, right? Plus, another thing that we'll talk about is earnings. So, valuation, if you follow financial ratios, are price upon earning, right? So, prices corrected a lot, so valuations came down, but earnings have also been not very attractive, right? Season will start early next month, and yeah, I think this season we saw something very exciting in the earning season. So that is also a big positive. So see, if you look at the Nifty or the broader market, or just the not the broader market, but just the large cap market, what you would see is that the profit growth rate has picked up, right? EPS growth rate has been revised upwards. For many companies, there have been more upgrades, or there have been more upgrades than the last few quarters, right? So typically, see, what an upgrade means is that people expect that the earnings would increase from their previous estimates. So all these analysts following these companies expect that the earnings would go up. Downgrade means they expect the earnings to go down. So recently we've seen more upgrades happen. In the quarter two of FY25 and quarter three of FY25, which was the last two quarters, the earnings were not that attractive, and slowly this time we've seen a lot of positives. At Right Research, see, we do run our own portfolios in the portfolio management scheme space or in the RA space. And what we have seen is across the companies that we cover, which, many of them would come into the small and mid cap category also. And what we have seen is in those categories as well, there's been a lot of positive sort of, upgrades that are happening. So earning season has been quite attractive, and what we expect is that the next earning season that is coming in July would see again more upgrades, right? And that means you would get valuation comfort, like I said, because valuation is priced by earnings. So it's earning increases, valuations become attractive. Plus, your prices are also picking up momentum, right? So I think it's a very exciting time in the market for sure. but also there is uncertainty. One big uncertainty is obviously on the tariffs. You can see that the uncertainty index, right? So this is something that is published by a global company, which is amount of uncertainty in trade across the world. You would see that that level went extremely high in April, right? And then it came down. It has come down recently, and we expect it to actually, because a few trade deals are going to happen. I think U.S. China trade deal has happened. I think India is also negotiating and might close a deal soon. I think the worries on tariffs is coming down. I think one big concern, obviously, is the geopolitical concern, and we all saw the 12-day war between Israel and Iran that escalated, right? So that is another big thing that people are sort of watching for. But I think things are even becoming clearer in that space. Now, talking about tariffs, what you would see is that you know uh, if the tariffs are impacted, how is India going to be impacted? For that, we'll have to see what are the different industries in India that depend on to export to the US. You would see primary impact would be there on the electronic, gems, textile, pharma, machinery segments, and electronics was exempted from the tariffs, but I think bigger impact might be seen in the gems and jewelry segment and on the textile also. But I think with India and UK forming a trade deal, even the textile segment might not be that impacted. And pharmaceutical, obviously, Donald Trump doing a lot of things on the pharma segment, so that segment could see impact, and we're seeing, I think, price correction in pharma stocks probably because of that uncertainty. But yes, India is not the biggest trading partner with the US. We are still relatively small, and if something happens, only a small segment of our GDP will be impacted, right? And in terms of GDP, also, if you guys sort of follow the news, you would see that India came up with one of the best GDPs across the world recently, and I think the estimates for GDP that are coming up are also quite strong. So there's a lot of positivity at that front also. Among all the volatility in the world, India continues to be a strong center due to the emerging industries in the manufacturing industrial segment, plus the huge consumer base, right? So I think it's a very exciting time for the Indian market. Now, so having covered why we think it is a positive time to invest, also we talked about geopolitics as well, right? So geopolitics, we saw fears really rise up in the global market with US bombing Iran nuclear sites. But I think with the ceasefire declared, we are seeing a lasting sort of impact of that ceasefire, and we hope that that impact continues. But having talked about everything happening around the world and why the market is looking exciting right now let me talk to you about what is the way to invest in this market, right? So here I will touch upon what is the philosophy that we as Right Research follow, right? So our philosophy is that we try to invest into the market based on some data based metrics, right? So we think, why does a stock or a portfolio do well? Any stock or portfolio would do well either because it has good valuation, or you guys might be watching news and YouTube and TV and stuff like that, and what you would see is that a stock or a portfolio does well either because the valuation is attractive. People think that it is undervalued, so good time to buy. A lot of investors jump in, and that's why the stock price goes up. Or the company is growing at a very fast pace. For example, one example would be like a company like Trent, right, which has shown very significant uh, quarter on quarter growth rate, right? And it's a very attractive growth stock in that sense. Another idea would be quality. So, to give you an example here, a company like, let's say, Pidilite, right, which tends to have a very consistent return on capital, right? So amount of cash they generate, or amount of profit they generate for any money put into that company is very high. It's a very high quality, consistently profitable compounding company. So that's a high quality company with a lot of business modes. And then another thing that people do is invest based on the trend, which is called momentum investing. So momentum investing is not based on any fundamentals of business per se, but it is based on something that is called behavior or supply demand in the market, right? So as investors in the market, you would see that markets are not always rational, right? Many times you would see that sometimes, even though earning came out very attractive, right? Markets have come with a very attractive earning, but the price, like a stock has come up with a very good earning, but price is correcting after that. Or sometimes, earnings are not that good, but the price appreciates, right? That is because, first of all, markets work based on expectations, right? They work on expectations. If you think something is going to go up, after 3 months you start buying that stock, right? So it is expectation, plus a lot of it is not rational. Sometimes, you some I mean a lot of it is, like you said, not rational. It is based on behavior, right? So people might not buy a, a stock the moment something changes in the fundamentally in that company, but slowly people will realize that okay, there's a potential, and that's why the trend picks up. What I'm trying to explain here is something that that I'll explain using this chart, which is the chart of momentum, right? So among all the different factors that are there in the market, what we have seen is that momentum as a factor tends to be the most attractive one when the markets are going strong, right? Momentum does the best in the Indian market when the markets are going through a strong phase. And that is what, and why does it do that? Because momentum is based on this philosophy of supply and demand, which helps us pick stocks that have picked up a trend. So, what I'm trying to explain here is that, um, you know, sometimes there could be a change in value in the underlying company. Let's say the company is doing a lot of capex, right, which should start delivering after some point in time. So you that event might happen today, but doesn't mean that the price will start moving by itself, right? Slowly, you would see people realize, okay, due to this change that is happening in the company, there is a there is an attractive proposition in this business, and they expect the prices to go up. Slowly, somebody would start buying, and only after you see that a whole lot of people have jumped into the stock, that is when the trend develops, right? That is when this price appreciation happens, right? Momentum investing as a strategy, what it tries to do is it tries to find those opportunities where this trend is being formed, and tries to ride this price trend, right? So this price trend uh, uh, is not just based on short term movements. It is looking at a long term plus short term price action, plus we are also looking at expectation on what is going to happen in the particular stock, fundamentally based on, let's say, estimates from some smart analyst. Momentum investing strategy tries to find these trends and invest into them. And essentially, what we try to do is capture such price shifts. Now, I said that there are a number of factors that we talked about in the market, right? There is momentum, there is value, there is quality, there is growth. But why do I think right now is the good time to invest into momentum, right? So here, what we'll do is we'll try to look at the different cycles in the market, right? Sometimes the market goes through a contraction, right? So like recently, we saw some contraction happen, right? You saw that, okay, there was a correction that happened across different segments in the market. And what we see when such a correction happens, people try to buy only high quality companies, right? So like we saw in the chart initially that the large caps were doing very attractively, even though there was a correction that was happening, right? So there are phases of contraction, and those times quality is the attractive one. Sometimes when recovery happens, you would see, when from a deep correction, when the recovery happens, people start buying value stocks that have come down quite a bit. Then even in times of slowdown, you will see quality stocks do well. But when an expansion happens, when the economy is actually growing at a good pace, that is where momentum tends to be really, really powerful. We think right now, recovery has happened, and there's going to be an expansion that will happen in the Indian market, and that is why momentum will be a very attractive strategy to invest into and look into and include it into your portfolios. So to give you an example, I've given you the theory, but let me give you some real world examples about momentum. And the examples that we show are not recommendations from our side. These might be some of the stocks that we actually hold in our portfolios. So just showing these for representation purposes, like what does a momentum stock look like right now on today's date, right? So if you look at a stock like Narayan Hridayalaya, you would see that there's a clear uptrend or a price appreciation that is happening, right? And this price appreciation or momentum, the momentum that I am talking about is not a short term momentum. It's not like a BTST ki, okay, tomorrow it might go up, so buy it today. It's like capturing, buying some stock that might appreciate by a big margin in the next few months. So one such example might be Narayan Hrudale at this point in time. In the healthcare hospitality segment, like we all know very, very well, especially this stock here, which is Coromandel. In the agrochemical space, you see a very decent price movement in this stock. Another example, like I think many of us might be invested in or interested in, might be BSC. You will see the BSC stock doing really powerfully over the 1 year, and it is one of the highest performing stocks at the moment. I have another example for you, which is Shally Engineering. This is a small cap stock, a emerging stock, which is again picked up a very strong momentum. Right? So they have some of the few examples that you will recall and you can see for yourself, which are very strong momentum stocks. Now let me talk to you about we've understood what are the momentum, why momentum is attractive right now. What are some of the stocks that might be in momentum? Let me talk about which sectors which we think are attractive, and where you can take advantage of the current attractiveness of the market and invest, right? So first thing we will look at here is the foreign flow, right? What you would see is in the recent times, a lot of foreign buying is happening in the market, and most of the buying that is happening in a few sectors, like you see financial services being one of the biggest segment, then you're seeing telecommunication being one big segment, you're seeing capital goods, healthcare, uh, professional services, utilities, materials, auto components. So you're seeing buying across the segments, and you're seeing selling happening somewhere in the energy, software, consumer, and FMCG segments, right? If you look at the last 12 months or last 6 months, right, you would see most of the buying has happened in the financial services, capital good, automobile segments, right? So these are the attractive ones, and we are also seeing sub industries which are attractive. Like we talked about chemicals sometime. I think chemicals are looking very attractive. We talked about some pickup happening in automobiles, in cement, etc., right? So differentiated segments in the market are seeing some strong trends. And some of the attractive sectors that we think are that you should look at right now is one, capital good. So capital good includes your railways and some of the defense related segments as well. And you will see obviously there has been a very strong recovery that is happening. Why is this strong trend happening? It is primarily because there is a lot of there's a strong order book that is building up, right? There's a lot of energy transmission and distribution, hydrocarbon, EPC are some of the areas where you're seeing order books are getting built up at a fast pace. Also, you saw core sector output grew by 6.3%, and cement and steel demand is also therefore picking up due to this sustained activity. So capital good and industrial after a long time, right? I think in the 6 months from September to March, or even July to March, there was not more activity, no more activity in this segment, but slowly this is seeing a pickup, which is very attractive. Then obviously defense is a story that we've all seen. We've seen a very sharp rally happen in this segment, even though after the war situation has calmed down in the Middle East. We're seeing some correction happen in these stocks, but again, the policy in India is very positive towards defense. You're seeing exports are rising. I think our defense equipment showed how good they were during the India-Pakistan war situation that happened. I think inventories being built up in different countries. I think export attractiveness of these companies is increasing, and similarly, the government is really incentivizing this segment. So we've seen a strong momentum in this segment. There might be some cooling off because the war situation in Israel and Iran has calmed down, but again, it's a very attractive segment right now. Then you have auto and EV. So auto and EV is a segment that has not seen a very strong movement recently, but look at the last 1 week, you will see, okay, a very good pickup happening in this segment, right? The recent set of data that came in, we saw PV sales grew 11% in May. Two-wheelers saw 8% growth, and even festive demand, is sort of aiding this. Rural recovery is finally happening. EV penetration is happening. You're seeing Tata Motors wants more than 20% share by FY27. And as EVs are rising, you're seeing auto ancillaries, right? Auto component manufacturer, for example, battery management or other components, you're seeing those companies are seeing a lot of growth. And these companies not only cater to India, but they also cater to the export market. So therefore, autos and auto ancillaries right now is looking quite attractive. Then we have financials and banks, right? So Bank Nifty is again doing quite well. It's up 12%. PSUs are outperforming. The credit growth is strong, and you're seeing personal loans, housing, and SME loans are leading. Uh, you're seeing NPAs are low. The quality of different banks as well as the growth rates are picking up. Uh, so so it's attractive time for this segment as well. And select private banks are looking very strong fundamentally. Even strong some NBFCs, like NBFCs that cater to vehicles, micro loans, are seeing very strong growth. Even NBFCs in the housing segment right now are looking quite attractive. Now let's talk about consumer discretionary. I don't have a chart for consumer discretionary. I put down FMCG here, but you will see that consumer discretionary is also seeing a strong growth. You're seeing growth in QSRs, domestic appliance makers. You're seeing growth of footfalls in malls, in retail stores, even in e-commerce apps, right? Uh, I think consumer discretionary as a segment is also seeing a lot of positive movement, right? So with consume, and I think everybody is betting on the consumption story in India, and as that happens, the consumer discretionary segment would be an attractive segment to build to sort of bid on. Then another favorite sector of ours is cement. Cement has had a very good run up, and it is also seeing a strong pickup right now. You're seeing good price movement in the cement index. Um, Obviously, cement industry goes through a lot of tough times. China does a lot of dumping of chemicals. The global tariff situation is not very good for the chemical industry. It creates a lot of hindrance across the board. But India being an emerging economy, with all such industries, machineries, components coming up, there's a huge demand of chemicals, right? And you're seeing chemicals, plastics, um, different sort of components, right? Seeing that pick up because of the industrial growth. So chemical companies catering to the domestic economy, right? So we bet on a company that manufactures plastics. We bet on a company that manufactures chemicals for fragrance. These companies are quite attractive. Similarly, uh, agrochemicals, right? Companies that cater to the agriculture industry with the strong monsoon that is coming up. It would increase the demand of agrochemicals, and that's where you might see domestic chemical companies being very attractive. Finally, let's talk about IT services. IT, has been underperforming for a while, but we're seeing some pickup happening right now. It is underperforming the benchmark. Uh, but yeah, I think people have been betting of slowdown in the global market, and that's why IT is down. But now with improvements coming up, and I think the tariff situation clarifying itself, geopolitical risk going down, maybe the situation might not be that dire in the global markets also, and that will help the Indian IT industry. So these are some of the segments that we think could be quite attractive, and could be a good place for you to bet on in this market, which we think would be very strong for momentum. So that was all I wanted to cover in my presentation. I'm sure I've been talking for a very long time. What we will do right now is we'll go over and we'll take on some questions from the audience. Hi Anushka.
Hi.
Hi.
Ma'am, this webinar was truly insightful. I'm sure we have all learned something today. Before we conclude, I'd like to open the floor for any questions from our audience to be addressed. Audience, if there are any questions, you can drop it in the comment section and we'll pick it up. Ma'am, if you spot something which is relevant to the topic, you can take it up too.
Definitely. I think somebody is asking me a question on a defense stock in the chat, right? Which is Garden Reach. So, do you want me to take stock specific questions, Anushka? Is that fine?
If you are comfortable with anything, but we would prefer to stick more to the topic and not do any
Right. So,
kind
I
of
think, see, I
recommendation.
can talk to you. I think all these questions that are coming in, I can give you a sectoral view, maybe not talk about specific specific stocks, but talking about the defense sector, right? So we have covered a little bit about defense, and like I said, we've seen a very strong rally happen in defense, but we're seeing specific stock that you mentioned a very very big correction happen, right? In that segment and in that stock. So I think, see, if you have been holding defense for this rally that has happened since March, this strong rally, maybe you could book out some profits uh, if you have made those profits. But if you are a long term investor, I would say please hold on to these stocks, because like I said, this growth is happening because of the order book being built in, right? Because of the uh, strong order visibility that these companies have, strong focus from the policymakers, right? So I think defense is an interesting sector to definitely hold on for the long term, but there is some impact that is happening right now, right, in the short term. Maybe I will talk a little bit about, somebody's asking about Colgate, Palmolive, and Asian Paints. Again, I will not talk about specific stocks, but what I can talk to you about is, see, these two stocks that you mentioned are all very high quality stocks, right? So high quality stocks means that they are very stable across market cycles. Whatever happens in the market doesn't impact the stock that much. I think Asian Paints right now is under a lot of pressure, right? Asian Paints is obviously going through a lot of price correction for a very long time. But on the other hand, you talked about Pidilite, which is I think Pidilite, right? About Colgate Palmolive, which is an interesting stock. I think Colgate Palmolive gains a lot from the rural demand. Might be an interesting time to buy this particular stock. Asian Paint, see again with the crude prices being very volatile, the stock will see some volatility because of it. But I think the crude prices have cooled down, which might aid this stock. But yeah, I think high quality stock you should always maintain in your portfolio. But like I said, right now we think that it is a good time to invest into momentum. Mr. Rahul Raj has asked about persistent. Again, I would not talk about specific stocks. And persistent, by the way, is one of the stocks that we also have held on for some time. Uh, Again, IT services, you're seeing a recovery happen. If you follow uh, news of the global markets, right? What you saw was there was a positive earning report that came out recently in the global market. I think which is gives us some hope for the Indian IT industry. And in the Indian IT industry, we think there could be positive surprises that we will see in the next quarter. And certain specific mid cap stocks like the ones that you talked about do have a strong earning visibility, which make them attractive compared to the overall segment. Somebody is talking about the pharmacy segment, again very attractive. Recently you've seen a very strong momentum in diagnostic and pharmacy stocks. For example, Krishna Diagnostic is one you saw very strong momentum happen, right? It's a very attractive stock. Similarly, you're seeing hospital segment. So I talked about Narayan Hridwale somewhere, Fortis, stuff like that. You're seeing very strong, these are momentum stocks, right now, which shows that these segments are definitely attractive. I think we also saw news that Amazon is coming into the diagnostic space, which makes that might bring even more higher growth to this segment. A very interesting question is Mr. Tarun is asking that these are all broader commentary that I gave, but he wants to understand that as a retail trader, which is the safest investment zone. So, Mr. Tarun, I think as a retail trader, uh, you really have to understand your goals and your risk profile, right? So, see, there are different types of investments in the market. There is a safe investment, which is a fixed income or your FD. There is a moderate risk investor investment, which you can do with a mix of gold, debt, and equity, right? Or through a balanced or multi-asset fund. Or you can invest into equities, and even in equities there are large cap, small cap, mid cap, right? So you have to understand what is the allocation that you need to have based on your goals across these segments. And working with an advisor there will be very good for you. uh, Safest zone right now for you to invest, like I said, look at your risk profile, find a healthy mix of assets for yourself. And coming to the topic at hand, the something that we are talking focusing a lot about in this session is on market and on momentum, right? And we think that market and in market and momentum, focusing on the having that as a part of your portfolio. So your full portfolio might should not be momentum right now if you want a safe investment, right? But if you are looking to take some risk for the longer term, then maybe 10-20% of your portfolio can go to a momentum strategy. Somebody's asking about views on small cap funds, right? Small cap funds, I think, have seen big corrections, and I see a lot of strength and strong demand or strong growth in these funds because if you look at the earnings that came in recently, right, in the last part of the earnings, right, early June, late May, we saw many small and mid cap stocks come up with earnings. And we saw, at least in our portfolios, the stocks that were in this segment, very strong. So a set of numbers across the stocks, right? To give you an example, we talked about Shalby Engineering as a stock which came out with standout earnings. We talked about the other various number of stocks that have come up with very interesting numbers, right? Which tells us that the fundamentals are strong, valuations are low, so this segment would be attractive. But obviously, small cap funds also have a risk associated with them. What that means is that sometimes when there is panic selling that is there in the market, when people sell in panic, then what happens is that uh, because these are small, the price impact is higher. So you have to understand that there could be sharper movements in these strategies, but in the long term, they are very attractive instrument, and I think right now could be a good time to buy these stocks. I think another question about steel stocks. Steel stocks, I think, would be interesting. A lot of stuff happening in the geopolitical scenario. I think steel were also impacted by the tariffs, and Donald Trump is putting tariffs across the board. But I think Indian government is also incentivizing steel players in India, and we see a strong. I think steel could be attractive from this point in time, but there could also be a lot of volatility in the steel prices. Next question is best stock for 6 months. I think I don't want to give you a stock recommendation in this video, but but we do have services that will help you find good stocks as a retail investor or as a larger portfolio investor with us. So do reach out to my team. You'll find us on the internet. Captain Ambika has asked me questions about United Spirits, HAL, BEL, Ratan Enterprises. See, I think these are all good. HAL, BEL are very attractive right now, but again, defense stocks might see some correction. And again, I don't know to give you specifics on it, but it's a good sector to be in for the long term. You're talking about United Spirits. Again, the alcohol beverage segment is looking attractive, so I would recommend that you could invest in that one. Tata Motors, like I said, you're seeing some positive news in the auto segment, and Tata Motors has been on a big low recently, so it is looking attractive from valuation and even with prospect, so could be interesting one. uh, Somebody is asking about the infra sector, right? So infra sector, again, like I said, it is something that we are very positive on. So in my presentation, talked about capital goods and industrials. And similarly, infra segment is looking quite attractive at this moment. I think we've seen signs in the capex, capital expenditure by the government. We're seeing pickup in those numbers, and that is an attractive news. And we are quite positive on the infrastructure segment. Select pockets of it, I would say, like right now, you're seeing big movement happen in the PFC, REC infrastructure lenders because of a positive news came out from the RBI. Similarly, similarly, you would see, like we talked about transmission distributions, the solar modules, the alternative energy segment in India. So we see a lot of positives across the board, right, for the infrastructure segment. Somebody is asking whether investment in a small finance bank is safe. Uh, I think definitely that might be interesting, but it totally depends on which bank you are investing in. For example, right now, if you look at the set of banks, we think that select banks are looking quite attractive, but I would not say that blanketly you should buy any small bank. Okay. Somebody's asked, I think I saw a couple of questions about Dixon Technologies, which is very interesting. The Dixon Technologies is a very, very good company, very high growth company in the most attractive segment, which is electronic component manufacturing, mobile phone manufacturing, and working across different industries in the consumer electronics space. So it's a very interesting stock. But the stock has run up, and it is at a big high right now, right? It is, valuation wise, it is at a high, and you don't want to be allocated to at such risk valuation. You have to be careful. Plus, some of the PLI schemes that Dixon was gaining from have come down recently. They are hoping to get more PLI schemes in the future. So while this stock definitely is a very attractive one, you have to be careful of valuation. Plus, I think you have to be news based and maybe wait for the next trigger to invest into this stock. Um, Another set of stocks, people are asking about L&T. I think attractive segment. We talked about capital goods. It might be very attractive. And CAT, somebody is asking. I think yes. I think it's a very good stock and it's high momentum. So good time to be allocated. So we covered quite a few questions, Anushka. Um,
Thank you, ma'am, for your insights. We surely found this session knowledgeable, and I hope the audience also liked it as much as we did here. Your expertise and passion for this subject was evident throughout your talk. We appreciate you taking the time to share your valuable insights with us. Thank you, ma'am, and have a great day.
Thanks a lot. Thank you.